Hey everybody, Marty Mazur. Good evening. The 9th of August, 2016, your Tuesday video. I want to talk about bubbles. Bubbles seems to be what a lot of people are talking about these days. Whenever the market gets to and exceeds all-time highs and gets into uncharted territory, folks can get attention by talking about how they seem to know that the market's going to drop 50%, or that they seem to know that it's very bubbly and, oh, it's going to be so ugly. How they know that is what I want to know. So when I am inclined based on a headline to an article or to an interview, my interest is piqued. I want to know what these guys and gals are thinking so I can check the data and maybe assess the risk, recognizing when it's all said and done that there's just a world of uncertainty for markets in the short term, and nobody knows for sure. And as I always say, humility, in fact, as I suggested yesterday, is atop the list of the absolute best traits for successful investors, and more importantly, in my world and for you clients out there, financial advisors. So let's take a peek at what a couple of them have come out and said today and yesterday. And let's look for clues that they might offer in terms of why they think what they think.
We have artificially low interest rates. We have a stock market that, frankly, it's been good to me, but I still hate to see what's happening. We have a stock market that is so bloated. Be careful of a bubble, because what you've seen in the past might be small potatoes compared to what happens. So be very, very careful.
Okay, so that wasn't yesterday or today. That was actually June of last year. Here's the same fella again talking about bubbles.
Stock market's down about 350 points today, Mr. Trump.
Wow.
And the market, as you know, is in a pretty bad slump.
Right. I've been talking about a bubble for a while, Larry. So let's see. I hope I'm wrong, but I think we're in a big, fat, juicy bubble.
Okay, folks, that wasn't yesterday or today either. That was actually this February. Today, the same gent did come out. I don't have a video, though, and he said again, we're in a bubble, but he doesn't offer anything other than we're in a bubble. So, you know, you keep saying the same thing long enough in the market, no doubt it's going to ultimately come true. But I'm looking for something more substantial, something that tells us why we're in a bubble. In fact, when Larry Kudlow said, you know, the Dow's down 300 points, with all due respect to the gentleman, most investors, Warren Buffett would have said something like, Larry, you know, nobody can predict the market in the near term, and a 350-point drop in the Dow means absolutely nothing in the long-term scheme of things. It just means today sellers came in and buyers were reluctant to pay yesterday's prices. But let's not try to put too much into one day, 1 week, or 1 month move in the market. So Mr. Trump just really doesn't have anything of substance relative to the market to talk about. But here's a guy who actually publishes a report, happens to be called the Gloom, Boom, and Doom Report, I think is what it is. I've been watching him for years. He always pretty much tells the same tune. But generally, he has something substantial, some reason why, or reasons why he's so gloomy. Take a listen.
Let's go back into this idea of this 40% drop that you just talked about. Can you dive in a little bit more on that, Mark?
I think it will happen, and maybe even more. I think we can easily give back like 5 years of capital gains, which would take the market down to around 1100.
Why would that happen?
Well, you never know exactly why it will happen.
Well, shoot, market's going to go down 50%, so Mr. Faber says, and when asked why, he says, you never know why it will happen. So folks, there's nothing I can chart for you on that, because he's right. I mean, the market can go down. It can go down 5%. It can go down 50%. But if you make a call that it's going to go down 50%, you need to come up with why. So let's let him, maybe give us a little more texture. I think he realizes once he said that maybe that's not going to work.
But the fact is the market hasn't been really driven by buying, by genuine buying, but by stock buybacks, takeovers, and acquisitions. And the market, the leadership has been narrowing. There are not that many stocks that are making new highs. It's quite a narrow group of stocks that have been very strong.
Okay, so that's better. Number of stocks hitting highs is not very many. Narrow breadth, if you will, meaning the market's been kind of confined to a few big names. Well, now there's something we can look at. What you have in front of you is a breadth reading, the 10-day, 20-day, 50-day, and so on. That's the moving averages for the Dow and the S&P using the 50-day, which is a popular metric. As you can see, 76% of the Dow and 68% of the S&P are trading above their 50-day moving averages. 83 and 72 respectively on their 250-day moving averages. Folks, that's actually very good breadth, which tells you that the rally is exceedingly wide, not narrow. Another way to look at breadth or narrowness or lack thereof would be to look at the equal weighted S&P, the white line, the mountain chart, versus the S&P itself, which is the cap weighted index, which would be the green line. It's kind of like Mr. Faber was talking about 2015. Here's January 1 through August 9th of 2015. And the green line above the white line does suggest that the rally has been very narrow, but we're not in 2015. We're August 9th, 2016. So we really ought to be talking about 2016, and that's the chart in front of you. And as you can see, the equal weighted index is done considerably better than the cap weighted index, which means, again, that we are seeing, in fact, very good breadth and that this rally is anything but narrow. And then last but not least, take a look at the advanced decline line. This is cumulative advancers versus decliners on a daily basis. When it goes up, that means there's a lot more advancing issues than declining issues. Means that you have really good breadth in the market. So my chart here takes you back to the beginning of 2015. So again, Mr. Faber's story was indeed a 2015 story, but even that story in 2015 did not culminate in a 50% decline in stocks. So he made the statement, he did it, he's on TV, I congratulate him. He gets lots of attention, but he's always singing the same tune. He's just struggling with really the reasons why, because what he just cited, I can tell you conclusively, are not the factors that are in play this time around. So what we do have this time around, folks, is a market, SP 500, one-year daily chart in front of you there that's holding itself above the purple line, which is the all-time high. Went down, kind of tested it, actually didn't come all the way down to it. That wouldn't surprise me if it did do that. We have a 50-day moving average, the yellow line, that's nicely above the blue line and trending in the right direction. That's a good technical indicator. And you have volume, which is the second panel there, on balance volume. That's a better setup than I've seen in quite some time. So folks, yes, we're at all-time high. Yes, valuations are, I think, suspect here, although interest rates are very low. So there's another story that I have to tell you about valuations the world over and what that may mean going forward. But right now, the technical setup is fine for the market. Earnings have been interesting. I think the earnings season turned out to be a little better than expected. Right now, the Atlanta GDP Now tracker suggests that the economy in the third quarter is growing at about a 3.8% clip in the U.S., which is a substantial improvement over Q1 and Q2. I don't know that that'll hold, but that'll be interesting to see going forward. So again, the setup's better than I've seen it in quite some time from a technical perspective. I think the fundamentals are still okay, and I just don't see big bubble worries out there. But we have to stay humble, be open to all possibilities, stay very diversified, think long term, and not react to whatever the market offers up in the short term. And I'll keep coming back to you quite often to help you put all this noise into perspective. Thank you, folks, as always, for watching and listening. Have a wonderful evening, and I'll talk to you again very soon. Bye-bye.